Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, most recently in late October and November and early December, and I suppose also the congestion in January, February, late April, May and early June this year. I'd also add that for many months I had also highlighted how the 15,840 level, along with the low for 2021 at 15,665, was and is still key. So 15,665 has now moving away from it. We're moving away from that now. The slowly dipping mauve medium moving average is heading away from that, and that's currently at 15,325. Further up and moving away from the market, we have the dark blue July 24 to November 25 head and shoulders neckline, currently at 16,075, and in between the declining long moving average, currently 15,770. Altogether, these are some pretty heavy duty resistances which had easily capped the market. Meanwhile, prices have been capped near term by the 50% Fibonacci line for 2025 at 15,325, which had originally acted as a base of action but is now resistance. Below we have the November 2020 low at 14,935, which helped along with the 38.2% Fibonacci line of 2025 at 14,980 to halt the declines in late May, late June, as well as last week and this week. Over all of this, we have the bright red early October 24 to mid-March 25 bearish shift pitch hawk, with the market currently in between the overhead upper time, currently at 15,665, and the middle time below, currently at 14,385. Interestingly, this middle time, even now, is still not validated, but the lower time, currently at 13,375, well, that helped halt the fall 14 weeks ago on a closing basis, and arguably, also partially, on the low market basis, along with the October 2020 low at 14,040. So I'll take the pitchfork pattern overall as having some pretty good integrity. Now the hesitation we saw in April, May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end May action as a double top pattern, even Eve type. 7 weeks ago we reached and breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325. And as I said 7 weeks ago, and I quote, you would need confirming consecutive closes below this level to contemplate the downside. But whilst I cannot set target below, I can indicate potentials. Thus a primary potential after a confirmed break low would be down in the 14,835 zone, so not too far away, whilst the secondary potential low would be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to comment next time, end of quote. Well, 6 weeks ago I said, and I quote, we have not had a suitable move lower despite the break low, and so I'm considering retiring this idea, end of quote. Well, I am glad that I did not pursue this any further, as 4 weeks ago we tested lower to new lows not seen since mid-April, leading me to clarify the status of these two potentials. Thus we have a primary target X reached 3 weeks ago down at 14,835 and a secondary target X1 down at 14,380. Unlike what we saw 3 weeks ago, but for now, ideally I'd like to see a true move below the November 2020 low at 14,935, unlike what we saw 3 weeks ago, but for now these levels will do, or the one that's left will still do. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but not even now, but even now, still refusing to die, old dark blue May to August 23 bullish shift pitchfork. It's still there. That subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle times. This one still will not die. Even when I thought 14 weeks ago that it had finally expired, it is still nevertheless influencing the market, especially the dark blue lower time, currently at 26.76. It was a low last week. And next we have the bright green mid-December 24 to mid-March this year bearish shift pitchfork. Prices right now are once more just below the upper tie and above, currently at 26.64. So what else have we to look out for? Well, further down we have the low of March 2021 at 26.27 and the congestion at 26.01, plus from early August last year congestion at 25.49, 25.59 and 25.63, as well as the important 2021 low at 25.47. And that prompted those lows in August in the first place. So far these have been the base for this market, having given ammunition to its attempts higher. Meanwhile, topside, well, as I said 6 weeks ago, and I quote, I'd keep an eye upon the declining green short medium moving average. It's currently at 26.86, and mauve medium moving average, currently 27.37, plus what I suspect may be a key level, and that's the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. So we're finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So is it a basing action for a possible future attempt even higher? Back up to the broken dark blue upper tie, which is currently at 30.05, or is it hesitation, a somewhat large hesitation with potential down to the 23.10 zone? Right now it's not easy to say which, but I would keep an eye on the following. The bright green bearish shift pitchfork, no doubt. The short medium moving average and the medium moving averages and the 50% Fibonacci line at 27.55. They all have given a clue to a somewhat bearish future, but this has been countered by that big, old, broken, dark blue lower tine. Yes, that one, which is still there. LME 3-month tin. Okay, so the big picture here has been centered for a while on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We're in between the lower time below, currently at 30.150, and the middle time above, currently at 34.935. Now, as I've said here previously, much like some of the other metals I've discussed here today, there are a number of patterns affecting the market all at the same time. We have the low of April and 2025 so far down at 28.925, just below the July 2011 high at 29.005. On the way down, it passed through the now flatlining gold long moving average, which is now again support, currently at 31.670, and the closest support of the mauve medium moving average, currently 32.885. Then there is the purple neckline extension, currently 32.685, of the April 24 head and shoulders continuation pattern. This had been a resistance in the recent past, but I'm beginning to suspect that it might have been more of an attractor than anything else. So I raised the question some 7 weeks ago as to whether the recovery back up was part of a straightforward recovery, or would it perhaps become part of a bearish halfway hesitation in the making. 7 weeks ago I said, and I quote, right now it seems the market slowly eating its way higher with the green short medium moving average, the cap on rises, end of quote. Now that proved to be the case back then, but not now, as prices have risen now to test the 50% Fibonacci line for the whole of 2025 at 33.670 and the April 2011 previous all-time high at 33.610. However, the rise has not been smooth, and I have doubts about the ability right now for the market to move above the dark blue middle time, which is currently at 34.935. There is still the chance that this whole early April to action could possibly be a really, really, really big bearish halfway hesitation. But here, well, the bright red neckline extension is bothering me by its strong ability to hold up prices when it is tested down below.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.